Are you ready to be liberated? Are the markets ready to be liberated? Well, we have Liberation Day coming up April 2nd, and I'm sorry to laugh. It's just it's hard saying it with a straight face. But my name is Blake Morrow. You're listening to the Week Ahead video, and I believe markets are ready to get liberated. I could also argue that, hell, it seems like they already are. At least volatility's liberated, and it's off its leash. We are seeing massive volatility in this markets as we approach Tariff Day or Liberation Day, April 2nd, which would be next week. Yeah, thanks for listening to the Week Ahead video. We've got a lot to talk about. Obviously, this last week, jokes aside, this last week was really, really crazy. And it continues to be pretty crazy as well. I'm filming on a Friday afternoon. The markets are at their lows. And, everybody's a little nervous about what to expect going into next week. Now, that's not the only game in town, but for right now and for all intents and purposes for the Week Ahead video, it's really all that anybody matters, the only thing that really matters right now. Now, once we get past that, we're going to have the jobs report next week, and there is obviously other economic data that can move the markets, but that's what we're going to get into. Is really going to be talking about all this information that's coming our way. Now, before we get started, I just want to mention that if you guys haven't taken a trial of ForexAnalytix and gotten involved with our community, you should, because it's only $1 for 10 days to try it out. And if you haven't done it, you can really literally be in our community and be with other traders, see what charts that they're posting. You can have discussions directly with me. I was just having a conversation you can see with Mo. He was asking like, hey, are you going to short dollar Mexican peso here? And I'm like, on a Friday, nope, I'm not going to. I mean, how nice is it to have access not only to me, but to other traders like Ryan? Like you can see, conversations that are happening with, different traders, not only us, but different traders in our community, and everybody else is having conversations as well. This is a closed community only for the ForexAnalytix subscribers. And you can see what trades I'm in. You can see where we're getting in, where we're getting out. You know that Nick will be joining us in a little bit. He talks about his positions he's been in. Here's a timeline of positions he's been in. This is when I'm closing out of positions for the week. You can see I even keep running positions, not just myself, it's other traders too. So try out ForexAnalytix. Not only do you get this great platform with all this analysis, the live squawk feed, patterns in play, how we're looking to approach the market, but you also get the chat room where you can access traders like myself throughout the course of the week. Okay. Now, I do want to talk to you guys about next week's Liberation Day or April 2nd. Now, let me start by saying this before we even get into any of the charts and what else is happening next week. About the tariffs, it is a very, very complicated issue. There's a lot of specifics that are to each individual country. There's VAT taxes that you have to take into consideration, auto tariffs, what countries do what more of, and what segments of the market are being tariffed. I've seen so many macro analysts basically, like imagine with a bunch of papers, they just throw them up and they're like, I don't get it. Look, if they can't figure it out, it's tough for just traders like us to try to figure it out either, as well. What we can do as traders is really take in the announcements that happen and see what the market reaction is to it, and be open to understanding both sides of the argument. So when you see a trade moving in one direction or the other, or the market's moving one direction or the other based on the announcements that are happening, respect it, question it, and try to get your stops to break even as quickly as possible. I have been, me personally, I've become more of an active trader since the second Trump administration. It served me well. It's very difficult to try to swing trade this market, at least until the dust settles. So while we're navigating through all this, my opinion is try not to overthink anything, because it's complicated. It's extremely complicated from one country to another. From one currency to another, from one asset class to another. But try to look at price action and come up to a conclusion, because I think Chris Weston from Pepperstone, he said it best when we were on our trade-off show that we do every week together. It's on middle of the week every week. He said it best, our job as traders is really to take in, what the cumulative opinion is of the markets, and it's displayed in price. So, we have to be a slave to price. Like I said, he said it best, and I agree with him. At this point, you have to be looking at the market, see how it reacts when news comes out, and then try to go with it, because that's the way the market's seeing the information, whether you agree or disagree. It doesn't matter. Your opinion and my opinions, unfortunately, don't matter in this situation. We're taking what is the market, how's the market viewing it, and we have to trade with it. All right, so I hope, I wish I could give you more definitive answers, but like I said, it's so complicated and it's so murky, and the information that we get is very chopped up. So anyway, with that being said, yeah, we are worried about tariffs for next week. We're going to go through some of the major markets here in just a second, but I do want to remind you, and I'm just going to burn through some things that are happening throughout the course of the week. You can go on your calendar here on ForexAnalytix and just kind of, scroll through and see what's happening. So not only do we have, the tariff announcement, which is going to be April 2nd, which is obviously Tariff Day or Liberation Day. We also have the RBA's meeting this week. They're meeting on Monday night, which is actually Tuesday morning. So if you're looking at the Aussie, let's talk a little bit about the Aussie dollar, just because I want to really want everybody to really understand that the Aussie dollar, and let's go over to a daily chart. I think that's going to be the best way to look at this. The Aussie dollar, what you'll see here, and let's get rid of this and get rid of this, and we're going to get rid of that, and we can leave it just kind of like this. Let me get rid of a few other lines that we don't need at the moment. We talked about last week how important the 618 retracement is. I still think it's fairly important. But the way I'm viewing the Aussie dollar right now is more of a bear flag. Now, the reason why that's so vitally important is because the Aussie has not been able to rally when risk assets bounced. Copper rallied to new all-time highs on, tariffs. You had a lot of front loading of copper, so that's moved prices quite aggressively. So you had that. We've seen broad-based dollar weakness. Broad-based meaning the euro had gone up, the sterling rallied, Aussie couldn't. That's not a positive situation for the Aussie dollar. So when you look at the Aussie technically, and you try to be, how should I say, pragmatic about it, it's got a simple bear flag pattern. And if the bear flag pattern starts to play out, the direction you're going is lower towards 55 cents. Now, 55 cents is what I thought back during the COVID lockdown was a generational low. Well, if this pattern plays out over the course of the next several weeks or several months, the risk is that we could actually see a move to that generational low once again. So, I've always thought that this level wouldn't get tested, but, there's a good chance that we can. So, anyway, is that all going to happen with the RBA decision on Monday or, Tuesday morning in Australia, but Monday evening with the RBA? No, they're not expected to raise rates, and they're not expected to move on rates. Could we see a move like that in the future? It's entirely possible, but that's something that will develop over time. Other things that are happening this week, like I said, it's a jobs report week. So what we should do is we should take a look at the dollar index and just realize how heavy the dollar index is trading. I know I've talked a lot about the dollar index, and I reference this chart all the time. The one thing I want you guys to just note with the dollar index is while we're below the 200 DMA, the 200 DMA is also the 38% retracement of the most recent, this is the most recent move lower. So it's a very decisive move lower, 38% retracement. It resides at the 200 DMA. If you take the entire move, which this is the entire move, you'll notice this is the 24% retracement. So it is what we call a triple confluence of resistance right here. While you're below basically 108 or 108, 104.90, the dollar looks bearish. Keeping in mind that it's not just the jobs report this week. We have ADP non-farm, we have ISM data, we have obviously the jobs report on Friday, and the market is starting to assume, myself included, that the jobs report could start to show signs of weakness. So if you think about the structure of what the dollar looks like right now, and if the data indeed starts to weaken even past April 2nd, that is a recipe for the dollar index to hit new lows, which means that the euro would trade closer to 110. All right. So I wanted to show you the dollar index because I do think it's really important. Also, remember, the U.S. is not the only thing in town this week. We have Australian jobs, the RBA decision, and we have Canadian jobs. Now, I want to show you the dollar Canadian really quick because we had discussed it being in a triangle. We broke out of that triangle, but this could end up being a false breakdown. Now, what the dollar Canadian looks like right now on this video is going to be a lot different than it looks like next week. Why? Canada, I believe it's April 28th. And if you're a Canadian, and you can go down below and correct me or confirm, I believe that is the election day that Mark Carney has announced, the interim prime minister, which more than likely is going to get reelected or elected to be prime minister. Here's the thing, between his rhetoric and what the Trump administration is trying to do to Canada, to strong arm Canada into making concessions or whatever the case may be, after April 2nd, between then and the Canadian jobs report, the dollar CAD could move quite aggressively in one direction or the other. Technically speaking, yeah, that's a breakdown of the triangle, but couldn't we have, and I'm being, just kind of, how am I, not optimistic, I'm trying to be objective here, that yes, could we see indeed a reversal and a false breakdown of that triangle, which would actually lead to an upside breakout? Sure. At the same time, we could also see the dollar Canadian roll right back over. I think next week is going to be very important for the price action in the Canadian dollar. And what I hope for as a human that cares about our friends to the north is that I hope the U.S. and Canada can work out some sort of deal, and I think that's going to be very bullish for the Canadian dollar, which would mean that the dollar Canadian moves lower. But you can't dismiss the idea that Canada could very easily try to stand up to the Trump administration and really fight fire with fire. And ultimately, I don't think that, ultimately, at least initially, I don't think that's going to be good for the Canadian dollar. You would see the dollar Canadian go much higher. That means the Canadian dollar would be punished. What we get following next week and where we're at next Friday, I would say your guess is probably as good as mine. That's why you have to keep an open mind here and kind of take it day by day as we get through the end of the week, next week. So, the best places to be is going to be in the ForexAnalytix chat room, having conversations with us and other traders, understanding the way that we're thinking about the markets, how you're thinking about the markets, and having those intelligent conversations in a community where you can express your opinions and ideas and what you think is going to happen, and you can have responses from people like myself and other traders and other analysts from ForexAnalytix saying, yeah, hey, that's a great idea, but how about this? Or, no, I agree with you. How about this technical level? This is probably going to matter. Those are the conversations that are going to be really important this next week. And that's why being in a community like ForexAnalytix is going to be super important. Okay, like I said, that's what's really happening next week. There's so much, but take it day by day. And, the best place to be for this is going to be just in our live shows. You can go to our webinars page in ForexAnalytix. You have the flow show. And by the way, we do have a time change if you're in Europe. So all of our times are going to be back to normal, quote unquote. Thank God. I know it's been confusing for a lot of people for the last few weeks when the US changed times, rest of the world didn't. We're going to be all synced back up again. So we have the flow show during European hours. We have the F.A.C.E show. That's where you're going to catch myself and other traders, other analysts from ForexAnalytix on that show. Plus we bring in so many guests. Dale Pinker does such a great job bringing in guests that you might see on CNBC for a few minutes. He brings them in for half an hour at a time and really drills them about how they're seeing the market. So make sure you listen to those shows. Obviously, there's private shows that are in the ForexAnalytix community that you can be involved in if you're part of that. So, all right. I do want to talk a lot about different markets. I'm going to talk about gold. I'm going to talk about copper during the trade setup section. I'm going to talk about crude oil, the bond market, the S&P. I'm actually going to reference the NASDAQ and the Dow as well. I do even want to take a look at the German DAX really quick. So make sure you stick around for those markets. But at this moment in time, I'm going to bring in Nick from Trading Analytix. He is analyzing the major indices and also some individual stocks. So I'm going to pass it over to Nick. So Nick, thanks for joining us, and we'll see you in a few minutes. Enjoy your time with Nick.
Hello everybody, this is Nick Groves of Trading Analytics. Blake, thank you as always for passing it over to me. I'm going to go and talk a bit about equities and what a week we just saw. I went back and rewatched last week's Week Ahead video, and what we had talked about was the idea of us back testing the breakdown that we just recently saw. We also had the sell zone listed up for you all, as we kind of expected a pop and potentially a rejection coming into this week, which is what we ended up seeing. You'll notice that the market came up in between the 38.2 and the 50, back tested the breakdown, and it really rejected around the 200-day moving average as well. And now has triggered this bear flag as of today. Now, where does that bear flag actually take us? Well, theoretically, it could take us back to 5,100, which is quite bearish. And if you look at the other sectors of the market, like the NASDAQ, you'll notice a bear flag that triggered today. You'll notice in the Dow, we also triggered a bear flag. And we are noticing a lot of weakness pick up in the chat room, too. I mean, I remember messaging Blake on Wednesday, hey, do you see this evening star? Stepped off from my mobile. Blake pointed out, and we started talking about the likelihood that this really should find its footing now. There's some news about NVIDIA coming out. So the semis have been taking a hit, and I'm going to cover that here in a minute. But yeah, we've been pointing out we had this evening star formation. We rejected at the 200-day moving average. We came up in between the 38.2 and the 50. So the stars were definitely aligning for bears this week after that pop occurred. And now the question is, where do we go if we break 5,500? Well, I think everyone's going to be calling for 5,100 or so. This 50% retracement. You're going to see a lot of headlines, in the event that we come out and break 5,500. If we take out these lows, you're going to see market crash, recession. The headlines are going to come glaring at you. And I think what's most likely is that we actually come down towards this 38.2, around 5368, 5400, somewhere around there. Take out these stops, flush another 2%, and then we might find a footing. And why would we find a footing? Well, when you think about corrections and how often they happen, we only get a 10% correction about once a year. 20, if you want to pause the screen, you can take a look at that. It's a little bit larger time frame that we're not quite in yet. If you also take a look at the 3-month outlook after the drops that we've just had, most of the time we're still up and sometimes big, 11, 9, 11, 11. So 100% of the time we're typically up after a drop like this. There's not just that stat, there's tons of others that I could point out. You'll notice the 3-month on this return after we were tied for the 5th fastest decline to 10%. So a lot going on, a lot to talk about, but the reason why I feel as if we might not get to 5,100 is due to statistics and what's likely. So I'm looking at a likelihood of testing the monthly 38.2, which actually multi-year. This is from the lows of October of 2023. I think it makes sense to come down here and tag the continuation fib. I know that this market is, we're down on the year and things feel scary, but I think until we break below 5,100, this bull structure is somewhat still intact. I know that sounds crazy, but the 38.2 is a continuation fib, and unless that's broken, I'm going to remain somewhat optimistic about this market. Now, let's go and talk about what's really freaking everyone out. NVIDIA, certainly, if you're in the community, we had this buy zone listed for you earlier this week. I'm not sure if it's going to hold, but it is a 786, and I do feel as if somewhere between 110 and the 786 and 108.77, it should find some support, and if it can't, and if it takes out these lows, that's where this market gets really, really tricky, because you'll notice the SOX index is breaking its lows, which is the semiconductor index. The SMH is right near its lows. Will it create a double bottom? It certainly could, but this is concerning. And if you look at the Mag 7 sector as a whole, I could dive individually through each of these, but what you'll notice is that all of them have pulled back roughly 20% on the year, and they're looking like they're about to take out the lows. Now, what does that mean? That means that the top stocks in the market are in a technical bear market if we take out these lows, which I don't think many people are talking about. If you want to continue that conversation and join us, follow us on Trading Analytix on Twitter, and I will catch you all very soon. Thank you so much, and cheers. Have a good weekend.
All right, Nick, thank you for your time and really appreciate your views on the market. I know everybody else does as well. And if you guys do appreciate what Nick does, for these
webinar
giving
online.
you his views on the market, make sure you jump down below, tell Nick thank you, and have conversations with him down there. I know he actually listens to reads all the remarks and all the comments, as do I. So make sure you get down there and chat with him and tell him thank you very much, and click the thumbs up for him. That'd be great. I'm sure he'd appreciate it. Okay. So at this moment, I want to talk a little bit about what other markets are doing, and let's talk about first and foremost. Let's talk about this move in gold. The gold market has been absolutely berserko, and we are going into new highs. Now, we talked about the false breakout last week, or maybe over the last 2 weeks. I thought that might be a throwover. The market's having none of that. So now we are in situations where we can be in a very accelerated move higher. Now, if you take the last move lower that you saw, the 160 or 261% extension comes in around 3180. To me, that looks like the next logical place that we're going to. Now that we're in an acceleration phase in gold. I've told you guys this for weeks upon weeks. I don't have a bearish argument for gold. And when you don't have a bearish argument for something, A, it's scary, and B, it's probably a good idea not to stand in front of it, because technical levels probably going to end up being like speed bumps as it accelerates higher. So gold looks bullish. I don't know what's going to stop it. I'm sure at some point we're going to have a great argument against gold, and it probably has more to do with rates. But at this, or maybe a de-escalation of something. But at this point in time, I don't see it. So just be respectful of the fact that gold only seems like it's going higher. I like to give you warnings if it looks like it's going to reverse. But how about we just start with this? Technically speaking, let's look for lower highs and lower lows before we look for a reverse on gold. I think if we can just stick by that rule, probably be in decent shape. All right, next market I wanted to show you copper. Copper has rallied to all-time highs on the heels of these tariff announcements. We've seen copper get snapped up. Now, if you listen to the shows all week, I have talked about copper being a potential reversal signal after April 2nd. After the tariffs and reciprocal tariffs go into place, copper is probably going to reverse here. It does look like a false breakout. Keep your eye on copper. I would say after the middle of next week, if we can indeed break this level, which would be more of a horizontal, that means you're making lower highs and lower lows. If you start making a series of lower lows, then you might have a false breakout brewing in copper. But I'm going to come back and talk about copper in the trade setup, so don't go anywhere regarding that. And by the way, if remember at the very end of this video, I talk about the 3 top trades of the week, but I also reviewed the top 3 trades from last week. Do that every week for you guys. All right, let's talk about crude oil. Crude oil continues to grind higher. Today it's come off just a little bit, but it has broken. We talked about this last week. It has broken the 24% retracement. Also, in case you haven't seen it, let me just draw this out for you. Okay. We have held that support. We've broken the 24% retracement. So now we're looking at the 38% retracement. I already had that drawn out for you guys from last week. One of the other things that has happened too is we broke a descending channel in crude oil. And one of the things, you would know that, obviously, if you are a ForexAnalytix subscriber, because all you have to do is go to crude oil, go to basic technical analysis, and you'll see exactly how those charts have been set up and how we've been looking for a move to the 71.10, 71.12 level pretty much all week long. So, but that's what crude looks like it's doing now. It looks like we're making it our way up to the 38% retracement. Again, we've talked about this a lot, and we talked about it even last week. Now, what crude does from there, I think, has probably more to do with risk appetite in general, but we'll see. We'll see if or when we get there. One of the other things I want to talk to you about is about the 10-year. Now, this is the ZNs, and longer term. Let me get rid of a few things here. Let me delete that. Let's delete this. Let's delete that. Let's delete this trend line right here. And we probably don't need that. And we don't need this bear flag completion, which is old. Oops, I didn't want to do that. Let's get that, this. And yeah, we're going to see we're brushed up against a 50% retracement. But what you might be looking at now that I've deleted all that, is eyeballing, is a longer term head and shoulder patterns developing in the 10-year. Now, if you think about why that would happen, what could create that type of move in the 10-year ZN contracts? It'd probably be risk aversion. You know, if the market becomes risk averse because tariffs are real, stocks are coming down quite aggressively, the bond market, which, by the way, one of the biggest positions in the market right now is short fixed income. You're short 10-year notes, short bonds, whatever it is. Well, we could see a squeeze higher, theoretically, in the 10-year. Now, if that's happening, and I want you guys to think about if bonds are moving higher, or in this case, notes would be moving higher, the 10-year note. If the 10-year note is moving higher, that means 10-year yields are doing what? They're moving down. So if 10-year yields are moving down, what's the dollar doing? Probably moving down as well. So I want you to put 2 and 2 together when you're looking at notes or bonds and think about that as we move along. Now, I know Nick showed you a lot of the indices, but I do want to just reference the S&P. And what you'll see in the S&P is we have that bear flag pattern. We've discussed that, and you can see how the bear flag pattern just continued to develop, and we are in it, right? So the S&P is in that bear flag pattern, and the bear flag pattern points to an eventual target of 5,100. Eventually. Doesn't mean it's going to go there tomorrow. It just means eventually that's what it should do. Now I want to take you over to the NASDAQ 100. And if you look at the NASDAQ 100, you could draw a very similar conclusion that we have a bear flag pattern. And that bear flag pattern pushes us a lot lower as well in the NASDAQ 100. So if you just copy, paste, or clone that, your bear flag pattern will eventually target 17,100 if it completes. So if you're a bull and you see that, that's not a good sign, right? I want to also show you the Russell 2000 bear flag pattern. The Dow is not as pretty of a flag pattern, but you can still get the gist of it here. It looks something very similar as well. So what I'm trying to share with you is the all the equity markets actually look like we're going to get a continuation lower. The problem is that we are in a seasonally bullish period of the market, and it usually turns bearish sometime in May. So if you're seeing this type of selling pressure into April, what happens in May when the market really gets fed up and says, you know what, I'm done until after the summer? So that's when you start looking at these bearish developments happening early this year from a seasonality standpoint, and it really tells me that we could accelerate lower over the next few months, especially if some of these lows are taken out. And what would really cause that? What would really cause the stock market to go lower? And by the way, if the stock market's moving lower, what else is happening? Volatility is increasing, right? If volatility is increasing, what's the best way to take advantage of volatility? Well, it's in the trader funding program. And if you don't know how to get access to larger amounts of capital, you can go to the trader funding program, and you could go to the live immediate trading accounts if you want to access larger amounts of capital right off the bat, or if you want to go to the more traditional route and more inexpensive route, you can take a one-step assessment. That means if you can make 10% without losing more than 6% on a trailing basis with an unlimited amount of time, you might want to go to the more efficient route at the one-step assessment. Then you can trade somebody else's capital. You can risk somebody else's capital. You don't have to risk your own capital. And plus, you get involved in the ForexAnalytix community at the same time, for a period of time anyway. All right. So to learn more about getting funding as a trader, check out the trader funding program. You can find it right on our website. And by the way, if you're new to the one-step assessment, if you're new and you've never done it before, you also get a one-on-one session with me personally for 45 minutes. And I'll walk you through how I've passed assessments in the past. I'll tell you what to expect, what some of the tools you get. It's a great deal for a lot of traders. So why don't you check it out? I think it's gonna serve you well. Now, going back to the question, how could or what could create the stock market and continuing the sell-off in the stock market is really that if the Trump administration is very serious about implementing tariffs overall, and they continue to put pressure on the market, there could be some downside pressure in equities. I want to read you something. This is I posted this on Twitter. If you got this is several hours ago. Michael Brown from Pepperstone, he says EU plans concessions for Trump after reciprocal tariffs hit. My thought process is, this concession by the EU, it obviously helped the euro, but it really tells me that the Trump administration emboldens them to really embrace the idea. If we continue to pressure China, we continue to pressure Canada, we continue to pressure the UK, Sweden, Norway, the rest of the world, whoever else, they will eventually bend the knee to our administration. I'm talking to you from the Trump administration's point of view. So if that is the case, and they do believe that, and they continue to press forward with these tariffs and put pressure on the rest of the world, that is a recipe, in my opinion, to see lower prices in equities, because that will probably push not only the global economy, but could end up pushing our economy, the U.S. economy, into a recession, which stocks ultimately will be very sensitive to. So, guys, I just want you, these are the conversations that we have all day long in the ForexAnalytix chat room and on our live shows throughout the course of the day. So if you want to get more of that information, come join us there. All right, at this point in time, guys, I want to, and I should mention Bitcoin. Bitcoin does not look good. Bitcoin has rejected the 38% retracement and channel resistance. You guys already knew that because I drew this out for you over the last several weeks, and you guys know that I think Bitcoin is developing a major top with the distribution pattern. But you'll notice that we have actually rejected the 38% retracement and the 50 DMA. If this is broken, If that is broken, Bitcoin will turn bullish, in my opinion, at least near term. But for now, we have to assume that this very technical formation and very technical analysis respecting asset class is following, staying below the 38% retracement, which is 89,200 basically. Okay, this is the point of the video. I'm going to talk about and review the 3 trade setups of last week, and I'll give you the 3 trade setups of next week. And if you love these videos and you think they're great for helping you prepare for the coming week, make sure you give me a thumbs up, subscribe to the channel down below so you don't miss any of these videos. And jump down in the comments and tell me what you think. Hey, I agree with you this way. I don't agree with you that way. And let's talk about it. Love to hear from you. And thank you for just giving me a thumbs up and subscribing to the channel, because it's free to do so. Both of those things. You can subscribe to our channel so you don't miss any of these videos for free. You just hit the subscribe button. All right. So in review of last week, the first trade setup we talked about was long the Euro Swiss at 85.20. Well, I'm long Euro Swiss and I bought it at near 85.20 or 95.20. I'm sorry. I was looking for a move off there, right? We have a double bottom. I think it's going to continue to bounce. One thing about the Euro Swiss, and obviously this trade worked, but one of the things about the Euro Swiss is a very good risk product tool. So if it can hold up, even as stocks come down, that's going to even give it more of a juice to bounce. I still like the Euro Swiss long. I am still long the Euro Swiss, and that trade number 1 worked great. Trade number 2, long Euro dollar at 107.30 if possible. That trade worked. And I spent maybe 5 minutes last week telling you how I was going to buy the euro and why this double top would not complete, and why we would be looking to get long at 107.30. The low was 107.35. And yes, I bought the euro down there. So hopefully you did too. So trade setup number 2, I don't know how more accurate that could have been. I guess it could have been a couple pips more accurate, but that did exactly what we talked about. All right, trade setup number 3. Short S&P below 5,500 on a bear flag. Well, that hasn't happened. At least not yet. So, out of the 3 trade setups, 2 worked perfectly. The third one hasn't happened. So, 2 out of 3 and 1 just hasn't happened yet. It's not bad. Okay, so that was the review of last week's setups. Are you guys ready for the review of, or are you ready for the 3 trade setups of this week? If you are, give me a shout out, thumbs up, retweet. That'd be great. Okay, so here are the 3 setups from this week. So trade setup number 1. I don't even have to leave this chart. I am looking for a breakdown of 5,500 and to short the S&P below 5,500. It would be the bear flag pattern. So trade setup number 1 is a ongoing from last week. It didn't happen last week, but can it happen this week? We'll see. A break below that 5,500 would be very bearish in the S&P, as you guys can all see. I've illustrated that. All right, that's trade setup number 1. Trade setup number 2. Copper. I'm going to take you back to copper. I do think this is a false breakout. I said it on the show yesterday as we were hitting new highs yesterday on the F.A.C.E show. And now a breakdown below here, which would be 5, would signal that not only did we have a false breakout, but we're making lower lows. So I think copper would be a potential short on that move. Trade setup number 3. Shorting the euro dollar on the yearly trend line. So that's probably at, I guess we have to do some homework here. That's going to be around 111-ish. So the yearly trend line is right here. It's the triangle too. So if the euro dollar can make it up to 111 roughly, I'm looking to sell at that trend line sometime next week. That's about 200 pips away from where we're at. So if we make a 200 pip rally next week to 111, I would be a seller up there if we see it. Okay. So guys and gals, those are your setups for this week. I hope you enjoyed this video. I hope you have a wonderful weekend. And I want to thank you so much for spending your time with me. I know it's extremely precious to you over the weekend, and you're probably watching this drinking coffee. Maybe you might be drinking a beer. Who knows? But thank you for spending your time with me. I appreciate you. And I'll see you on the Tuesday morning F.A.C.E show, April 1st. See you guys there. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.